We've yet to see any material impact from the U.S. administration's soft dollar trade policy initiative, but this is a story that is getting more and more attention and a story that poses downside risks to the global economy. It's possible this theme is behind the latest downturn in risk sentiment and pullback in stocks, though at the same time, it's also important to recognize the fact that the global economy is vulnerable to any negative shocks at this point in the cycle, with central bank policy accommodation measures and government stimulus tools already exhausted and not leaving room for much additional incentive to be still buying on every dip. On the FX front, soft dollar trade policy means less demand for the buck, something that we believe could eventually result in a much bigger decline in the dollar going forward. Currencies have been recovering in the latter half of the week, and the fact that the recovery coincides with warnings from President Trump of additional tariffs on China is probably no coincidence. Treasury Secretary Mnuchin was also out with a crafty statement on the matter, saying there would be no change to dollar policy as of now, with the as of now part of the sentence the important part to key in on. On Thursday, the pound came racing back to the top side, out from the depths of this week's 27-month low against the buck, getting an added boost on more solid UK economic data, this time from retail sales, while also getting help from Goodwill Day on the Brexit front, with Ireland's PM saying the border issue could be resolved, and EU's Barnier following up with willingness to find alternatives to the Irish backstop. In the U.S., the Philly Fed survey came in well above forecast, adding to a solid run of U.S. data in recent days that may also be contributing to the downturn in stocks, given the implication that this could result in a less accommodative Fed. That's all for now.